Imagine it is a Monday morning in New York City. The sun is shining, the coffee is brewing, and traders on Wall Street are settling in for what they think is going to be a standard week. But at exactly 9:30 a.m., the opening bell doesn't signal opportunity. It signals the end of the financial world as we know it. Within seconds, the Dow Jones plummets 3,000 points. Circuit breakers trip, halting trading, but the panic has already spread to London, Tokyo, and Frankfurt. Your 401k loses 20% of its value before you've even finished your breakfast. The US dollar, the king of currency, goes into freefall. Interest rates on mortgages shoot up to 15% in a single afternoon. This isn't science fiction, and it's not a scene from a movie. This is a very real mathematical possibility that keeps economists awake at night. It is the nuclear option of global finance. It is the day China decides to call in its debts. Welcome back to George Vance Live. We dive deep into the stories that shape your wallet and your world. Before we unravel this trillion-dollar mystery, do me a huge favor. Go ahead and hit that subscribe button and ring the bell right now. It helps us keep bringing you these deep dives, and trust me, you do not want to miss what is coming next. Today, we are talking about the ultimate financial weapon. We know about tanks, jets, and aircraft carriers, but the most dangerous weapon in the 21st century might just be a sell button on a computer in Beijing. We are talking about the China rug pull. What happens if the second largest economy in the world decides to dump over $800 billion of US debt all at once? Would it destroy America, or would it backfire and destroy China? Let's find out. To understand the threat, we first have to understand the trap. The United States runs on debt. It is the fuel of the American dream. The government spends more money than it makes through taxes, a lot more. To fill that gap, the US Treasury issues bonds. Think of a Treasury bond like an IOU. The government says, hey, lend me $1,000 today, and I promise to pay you back in 10 years with interest. For decades, this has been considered the safest investment on planet Earth. It is the bedrock of the global financial system. Because everyone trusts that America pays its bills, countries all over the world buy these bonds to keep their own savings safe. It is like putting money in the world's most secure bank. But here is where it gets complicated. For the last 20 years, China has been the factory of the world. They sell us iPhones, sneakers, solar panels, and furniture. Americans buy these things with dollars. This means China ends up sitting on a massive pile of US cash. Now, they can't just stuff trillions of dollars under a mattress in Beijing. So they invest it back into the United States by buying those treasury bonds. It was a perfect loop. We buy their stuff, they buy our debt. It kept interest rates low for Americans and kept the export machine running for China. But over time, that pile of debt grew and grew and grew. Today, China holds roughly $800 billion to $1 trillion of US debt. That makes them one of America's largest landlords. And the question everyone on George Vance Live is asking is, what happens if the landlord decides to evict the tenant? Let's break down the mechanics of this weapon. It's important to understand that bonds trade on an open market, just like stocks. Their price goes up and down based on supply and demand. But bonds have a unique feature. When the price of the bond goes down, the interest rate or the yield goes up. They move in opposite directions, like a seesaw. If China wakes up tomorrow and decides to dump all their bonds onto the market at once, the market gets flooded. When you flood the market with anything, the price crashes. If bond prices crash, that yield, the interest rate, skyrockets. Why does that matter to you? Because the US Treasury yield is the benchmark for everything else in the economy. It sets the price of money. If the 10-year Treasury yield spikes, mortgage rates follow instantly. Credit card rates jump. Auto loans become unaffordable. Suddenly, the government has to pay massive amounts of interest just to service its own national debt, which means they have to print more money, which leads to hyperinflation. It is a domino effect. China pushes the first domino by selling the debt, and the last domino falling is the purchasing power of the dollars in your wallet. This is the rug pull. It's the idea that China could yank the financial carpet out from under the US economy, sending us into a tailspin that makes the 2008 financial crisis look like a picnic. Let's play this war game out. Let's imagine a geopolitical crisis triggers this. Maybe tensions over Taiwan reach a boiling point. Maybe a trade war escalates into a total embargo. The Chinese Communist Party decides the gloves are off. They order their central bank to liquidate their US Treasury holdings. Hour 1. The massive sell orders hit the electronic markets in Asia. Algorithms pick up the anomaly instantly. Billions of dollars in sell orders flood the system. The price of US Treasuries falls off a cliff. Traders in London, who are just starting their day, see the screens flashing red. Panic sets in. Hour 2. The news breaks. China dumping US debt. The psychological impact is worse than the financial one. Global confidence in the dollar evaporates. Investors rush to sell their dollars and buy gold, Swiss francs, or Bitcoin. The dollar index crashes. Hour 4. New York opens. The stock market is a bloodbath. Tech companies, banks, real estate firms, everything is getting hammered. Why? Because higher interest rates mean higher costs for businesses. If borrowing money becomes expensive, growth stops. When the S&P 500 enters a free fall. Hour 6. The Federal Reserve holds an emergency meeting. They are trapped. To save the bond market, they have to step in and buy the debt that China is selling. But to do that, they have to print trillions of new dollars out of thin air. This signals to the world that the U.S. is monetizing its debt, which causes even more inflation fears. By the end of the day, the U.S. economy is paralyzed. Credit markets freeze. Banks stop lending to each other. The rug pull is complete. Now take a deep breath. That was the scary part. But here is the reality check that we emphasize here on George Vance Live. While China has this weapon, using it is basically a suicide mission. There's a concept in nuclear warfare called MAD, mutually assured destruction. It means if you nuke me, I nuke you, and we both die. The same logic applies to finance. Here's why China probably won't do this. First, if they dump the debt, the value of the dollar crashes. Remember, China holds hundreds of billions in dollar-denominated assets. If they crash the dollar, they are essentially setting their own savings account on fire. They would lose billions in value instantly. Second, China's economy is an export economy. They rely on Americans buying their stuff. If they destroy the U.S. economy, Americans stop buying iPhones and clothes. Factories in Shenzhen and Shanghai would shut down. Millions of Chinese workers would lose their jobs. Unemployment in China creates social unrest, which is the one thing the Chinese government fears more than anything else. Third, the U.S. Federal Reserve is the biggest whale in the ocean. China holds $1 trillion, sure, but the Federal Reserve can print infinite dollars. If China sells, the Fed can simply buy. It would be messy, it would cause inflation, but the Fed could absorb the blow. It wouldn't kill the U.S., but it would leave China with no leverage, no savings, and no customers. It is a weapon they can only use once, and it hurts them just as much as it hurts us. So if the sudden rug pull is unlikely, does that mean we are safe? Not exactly. The smart money isn't betting on an explosion. They are betting on a slow leak, a slow bleed. If you look at the data, over the last few years, China has been reducing its holdings of U.S. debt. They aren't dumping it all at once. They are slowly, quietly trimming their position. 5 years ago, they held over 1.1 trillion. Now it's closer to 800 billion. They are letting bonds mature and not buying new ones. This is the real strategy. It is called de-dollarization. China knows that relying on the U.S. dollar gives Washington power over them. So they are diversifying. They are buying gold, record amounts of gold. In fact, central banks around the world, led by China, have been buying gold at the fastest pace in decades. They are trying to build an alternative financial system. You see this with the BRICS alliance: Brazil, Russia, India, China, and South Africa. They are trading with each other in their own currencies, bypassing the dollar entirely. This is the long game. The danger isn't that China destroys the dollar overnight. The danger is that they slowly make the dollar less relevant. If fewer countries need dollars to trade, the demand for U.S. debt goes down. If demand goes down, interest rates in the U.S. have to go up to attract buyers. This leads to a slow, grinding decline in the American standard of living. It's not a heart attack. It's a chronic illness. We have to zoom out and look at the geopolitical chessboard. This financial tension is happening while tensions are rising everywhere else. The trade wars, the tech bans, the race for AI dominance. The U.S. has blocked China from buying advanced computer chips. China has restricted exports of rare earth minerals needed for electric vehicles. The financial rug pull is just one card in a very large deck. Some analysts argue that China is preparing for a scenario where they are sanctioned like Russia. When Russia invaded Ukraine, the West froze Russia's assets. China saw that. They took notes. They realized that having money in U.S. Treasury bonds isn't safe if the U.S. government can just freeze it. That is the primary motivation for them selling right now. It is about asset protection, not necessarily an offensive attack. They want to hold assets that the U.S. cannot touch, like physical gold stored in vaults in Shanghai. But let's go back to the what if. What if logic fails? History is full of leaders making irrational decisions. If the Chinese economy starts to collapse internally, which we are seeing signs of with their real estate crisis, leaders sometimes look for external enemies to distract the population. A financial war with the U.S. could be used as a rallying cry. On the flip side, the U.S. debt situation is getting worse on its own. We are adding trillions to the national debt every year. We're doing a pretty good job of devaluing the dollar without China's help. If China stops buying our debt at the exact moment we need to issue more of it to pay for Social Security and Medicare, we could see a rate spike without a hostile attack. It would be a simple crisis of supply and demand. Too much debt, not enough buyers. That is the scenario that actually worries Wall Street veterans. It's not the malicious attack, it's the quiet exit of our biggest customer. Let's bring this back home. What does this mean for you? Watching this on your phone or laptop right now? Why should you care about central bank maneuvers? Because these macro events dictate your micro reality. If China continues to step back from the US dollar, we are going to see structurally higher inflation for a long time. The cheap goods we got used to at Walmart and Amazon, those prices go up. The low mortgage rates of the past, those are gone. We're entering a multipolar world. For the last 80 years, the US dollar was the only game in town. Now the world is splitting into blocks. This creates volatility. It means your retirement portfolio needs to be more robust. It means relying solely on the stability of the dollar might not be the safest bet for the next 30 years. This isn't doom and gloom, it's reality. The financial landscape is shifting beneath our feet. So, is the rug pull coming? The odds of a sudden, catastrophic dump of 1 trillion in a single day are low. It is a nuclear option that destroys the attacker as well as the target. But the slow rug pull, the gradual shift away from the dollar, that is already happening. It is happening right now, every single day. China is slowly untangling itself from the US financial web, and that leaves America in a vulnerable position. We can no longer rely on foreign powers to subsidize our spending. The day US markets collapse might not come with a bang, but with a whimper, as the world slowly stops showing up to buy our debt. It is a wake-up call for the US to get its own financial house in order. We cannot control what Beijing does, but we can control how much debt we take on. This is a developing story, and the pieces are moving on the chessboard every single day. We are going to keep tracking the bond yields, the gold purchases, and the geopolitical moves, so you don't have to. I want to hear from you in the comments below. Do you think China will weaponize its debt holdings, or are they too dependent on the US economy to take the risk? Let me know your thoughts. I rate as many as I can. If you found value in this deep dive, please smash that like button. It really helps the algorithm show this video to more people who need to understand what is happening. Share this with a friend who loves finance or is worried about the economy. And of course, if you haven't already, subscribe to George Vance Live for more unfiltered, clear-eyed analysis of the world economy. Thanks for watching, stay sharp, and I'll see you in the next one.